Hi everyone, this is a top-down analysis trade review of this week top-down analysis. Before I start, make sure to like and subscribe to the YouTube channel. So I talked about the signal group having a 7 days trial. Now, a lot of traders have been chatting me up asking about the 7 days trial, saying if it's going to be on a limited time or it's going to be an unlimited time. Now, the purpose of the 7 days trial is for you to test out the structure of the signal, the way I do post the signal to see if you can take advantage of this trade as long as you're ready to become a member. So to answer all those basic questions on how the signals is being posted or if is it easy to copy, those are the things in which you'll be going through in that 7 days trial in which you'll be trading those signals to see if you can take advantage of those signals and the time I do post those signals if it will be a time that you will be available to take those trades. And every new individual join in the signal group do have a 7 day trial and it's an unlimited trial. As long as your first 7 days, you're not paying for your first 7 days, then if you find the signal group more helpful after the 7 days, then you are ready to subscribe to be a member. Then you can subscribe to be a member on the monthly subscription fee. So on the daily time frame of the dollar index, last week I talked about price going for the buy side liquidity. I told you guys that the overall idea of the dollar index is to see where price will support and run the buy side liquidity and anticipating higher prices for price to trade to the fair value gap was my first target. Then a complete run through the fair value gap to run the buy side liquidity that was the overall bias. I talked about price. We're expecting the consistent down close candle, which is the other block I will be paying attention to. I explained it on this week live top down analysis, which you can see price retraced to the other block. That was when I pointed out this rectangle area, which is the opening price of the other block. At the same time, I told you guys that price might trade lower to the initial order block, but at the same time, the overall bias is to see higher prices. So on Monday, during the live top-down analysis, price was already above the daily fair value gap. I told you guys price staying above this daily inversion fair value gap is a high chances of price trading higher. Tuesday retracement to the inversion fair value gap respected the inversion fair value gap. Wednesday traded higher, traded through the daily fair value gap. Tuesday price took out the buy side liquidity. Friday retracement to this daily fair value gap respected the daily fair value gap, traded higher, took out the buy side liquidity. And the 1 hour time frame of the dollar index, after price did the shift of structure from the other block from the daily time frame, on Monday price opened, traded above the daily fair value gap, retracement respected the other block, and price was around this area when we did the live top-down analysis this week. I was explaining that I'm anticipating higher prices, price to trade higher, and I would like to see price use the daily fair value gap as an inversion fair value gap to trade higher if price were to go for the buy side liquidity. After price traded higher, traded to this new week opening gap, I expected the new week opening gap, but for a brief retracement, which price did the retracement to use the daily fair value gap as an inversion fair value gap. After price retraced to the inversion fair value gap, shift in structure, retracement, other block, respected the other block, shift in structure, retracement. Price took out swing low before actually trading higher. So this is a breakers block. That was the reason price didn't trade much deep into the price range to trade to the lower candle. Price stayed above. At the same time, it was fully aligned with a new week opening gap. The new week opening gap price, you can see how price was staying below the new week opening gap. Price break through the new week opening gap, which I've talked about how to trade a new week opening gap. That whenever price trades through a new week opening gap, always look for price to use that new week opening gap as a support or a resistance area to trade higher, which in this example, price used it as a support to trade higher, and it was on Wednesday. So on Wednesday, price respected it, traded higher, before finally on Thursday, price took out the buy side liquidity. After the run on the buy side liquidity on the daily time frame after the close of Thursday's candle, price formed a daily fair value gap. On Friday, price opened, traded lower, took out Thursday's low, traded into the daily fair value gap, respected the daily fair value gap, traded higher, took out Friday's high, and at the same time running the buy side liquidity. So that was it for this week on the dollar index, which you can clearly see that from on Monday to on Wednesday, there was a clear perspective on where price is trading to. And you can see how price used those reference points as a support area to trade higher. And you can easily go through and review this chart personally to understand those key futures in which price did for price to deliver higher prices to run the buy side liquidity. On the daily time frame of Euro USD, last week I talked about this daily fair value gap that if price were to respect the daily fair value gap, we might see higher prices for price to run the buy side liquidity, running this other block. The reason is that price already traded above the mid range of the other block, so there's a low probability in price respecting the other block. That was the overall idea that if price were to respect the daily fair value gap, I will be looking for higher prices to run the buy side liquidity. But at the same time, I told you guys that if the dollar were to show higher prices in price, showing that price would trade higher, if there's a chances on the dollar index that price is trading higher, and on Euro USD price trades below the daily fair value gap, I will be anticipating lower prices for price to fill in this daily fair value gap, and my overall target is for price to run the sell side liquidity, which I explained that when it comes to a clear bias in that perspective, because on Monday, price already traded through the daily fair value gap, which I was stopped out from the initial trade I was trying to buy from the first shift in structure inside the daily fair value gap for price to trade higher. Price already stopped me out before the live top down analysis this week. So I told you guys that price already below the daily fair value gap, and there's a chances of price trading lower around the sell side liquidity and to trade through this daily fair value gap. So on Monday, price traded below the daily fair value gap. Tuesday, price retraced to the daily fair value gap, used it as an inversion fair value gap to trade lower. Wednesday, retracement, which should be price retracing to a 1 hour point of interest on Tuesday. We're expecting that point of interest price traded lower to a daily fair value gap. We're not looking for price to respect the daily fair value gap. We're looking for price to trade through the daily fair value gap. Thursday, price traded lower. And on Friday, retracement to this daily fair value gap used it as a resistance area for price to trade lower. Respected it, traded lower, and filled in the daily fair value gap. And the next draw on liquidity overall is to see price run the sell side liquidity. And the 1 hour time frame of Euro USD, after the opening price on Monday, price traded lower below the daily fair value gap. Retracement on Tuesday, price respected the daily fair value gap plus an inversion fair value gap, shift in structure. Retracement to the other block, which was my actual entry. For those in the signal group, know that I took a sell from this other block and the trade was posted on the signal group. Stop was at this high. The target was the daily fair value gap. Because for price to run the daily fair value gap completely, there was still chances of a retracement before a complete run. So I was trying to lock in profit before the initial retracement, which the overall bias is to see a fill of the daily fair value gap. Price respected the order block on Wednesday after the retracement to my entry. Price traded lower, formed another order block which is on a re-entry. Price retraced, respected the order block, traded lower. Trading through the new week opening gap, as new week opening gap is a strong momentum telling you that there's a strong possibility of price to trade lower. So seeing price trading through it was a strong probability of price trading lower to fill in the daily fair value gap. On Thursday, price traded to the mid-range of the daily fair value gap before actually retracing. Friday, price took out Thursday's high, trading to the daily fair value gap, which price formed after the close of on Thursday's candle. Price respected the daily fair value gap, 5-minute entry for your lower time frame, lower prices, target, swing low, and a complete fill of the daily fair value gap. Price filled the daily fair value gap, retracement, 1 hour fair value gap, respected it before. Price traded lower, leading to the close of this week price action. Now you can see how easy it is for you to take advantage of this entry. Now, I am not saying that it's going to be easy for you. Mine is based off experience, but understand the idea that when you have a bias and you know what you're doing on the price action, which I try to make this specific trading style very simple for you guys to understand. Trying to explain it as simple as it is. Telling you guys that you can use two time frame when you have a bias, you can easily use two time frame to take advantage of the market. The idea came about me opening the signal group, showing you guys that I can trade the weekly bias, trade the weekly expansion whenever the week is ready to expand, and use the daily and the 1 hour time frame, which that's the primary time frame I'm using in this trade review. I do take trades on lower time frame whenever the 1 hour is ready to expand, which I've told you guys how to do it. Like on Friday when price were expected, the daily fair value gap, that was a clean advantage of you going into the 5 minute to look for lower prices. Which on the 5 minutes you can see how price traded lower, shift in structure. My entry was the fair value gap. Price respected the fair value gap, traded lower. So my targets filling in the daily fair value gap. So you can see you can take advantage of it from a lower time frame using the 5 minutes, but I try to show you guys how to use only one time frame. On the daily time frame of GBP USD, last week I talked about price respecting the other block, and I want to see higher prices for price to trade to the daily fair value gap before the actual retracement lower. So on Monday, price failed to trade to the daily fair value gap. Tuesday, price traded lower. Wednesday, did the complete expansion lower, taking out sell side liquidity, filling in this daily fair value gap. And on Thursday, price did a retracement back to the range. And on Friday, price stayed inside Thursday's range. Price did not go outside Thursday's range. It was a ranging day on Friday on GBP USD. So price stayed inside the range on Thursday, inside the daily fair value gap. I didn't actually take any trade on GBP USD this week because the idea was to see price trade to the daily fair value gap before the actual retracement lower. Or if price were to retrace, I want to see price respect a daily point of interest to give me a clean confirmation on price trading lower. So after price traded lower, taking out the sell side liquidity, the idea was to see price use this daily fair value gap as an inversion fair value gap to trade lower. So after on Tuesday, when price traded higher back to the range, I was looking for Friday to trade to run Thursday's high before a retracement lower, which price did not do it, which you can see Thursday's high was higher than Friday's high. So I ended up not taking any trades from this currency. On the 1 hour time frame of GBP USD, on Monday, price open, traded higher, retracement order block. I was talking about this other block on this week top down analysis. I talked about price trading higher, running this equal high on GBP USD. I told you guys that it might lead to a complete run on this buy side liquidity and a retracement to the daily fair value gap. So I told you guys that I will be paying attention to how price will be trading on Monday. So on Monday, price did not run the buy side liquidity but took out the equal highs. On a lower time frame perspective, there was a good advantage of you using the 5 minutes to take advantage of this trade for the 1 hour to expand higher to run the equal high. Did an internal shift retracement, respected the other block. Now, this retracement to this other block was fully aligned with the dollar index and price trading lower. But the fact that at the daily time frame wasn't showing me any clear confirmation of price trading lower, so I actually did not take advantage of the setup. I looked at the setup where price traded below the new week opening gap, chances of price using the new week opening gap as an inversion point of interest, as a resistance point of interest for price to trade lower. But I did not actually take the trade. Mostly it's about discipline, about price correlating on both time frame. I need to see that confirmation before actually taking those trades. That was the reason I didn't actually take the trade. Well, you can see how price respected it, traded lower, traded through the daily fair value gap, led to lower prices on Wednesday. Thursday retracement back to the range, and on Friday, mostly Friday spends its time consolidating within Thursday's range. So there wasn't much of an advantage on the GBP USD based off my own trade idea from the higher time frame perspective. On the daily time frame of USD JPY, last week I talked about price trading higher to run the buy side liquidity, and there might be see an expansion in price trading higher if it was to align with the daily time frame and was to align with the dollar index. We might see higher prices. So on this week token analysis, I talked about price respecting the other block, price respecting this other block, leading to higher prices, which you can see on Monday, price traded higher, Tuesday higher, Wednesday higher, running out an expansion buy side liquidity on how far price will expand to. Thursday, price traded higher, Friday, retracement to a daily fair value gap. Now on USD JPY, I didn't actually post the setup in the Signal group. Now the reason was that I haven't added expansion trades to the Signal group whenever price is ready to expand without a clear draw on liquidity, where I were to look at price based off a Fibonacci retracement. So I did not actually post that setup because I wanted to develop more on the trades that I'll be posting on the Signal group as time goes on. First, I want us to be in profit trading high probability setup before actually taking those mid-range trades. So this is a real mid-range trades because sometimes whenever the USD JPY takes out a buy side liquidity, you might see a retracement, just like this example here. You might see a retracement to a daily point of interest before actually trading higher. So because I was sticking to a high probability setup, I was waiting for price to do that retracement before actually trading higher, but price kept trading higher and traded to a one standard deviation, which will be included later on the signal curve. But for now, we're sticking to high probability setup. On the 1 hour time frame of GBP USD, the Monday price traded higher, which I told you guys that looking at the 15-minute time frame, you can look for an entry during this trend trading higher to run the buy side liquidity. That this is an intraday trades. Once you understand how to trade intraday setup, you can take advantage of the setup, which was around New York section. I told you guys on this week total analysis to look for higher prices to run the buy side liquidity because that was the immediate liquidity in price for price to run through that might lead to any retracement to a 1 hour point of interest. After running out the buy side liquidity, price retraced, respected the other block in which price formed during that price range. After respecting the other block, created a swing high retracement of the block. Now this is a re-entry if you try to trade the expansion in price trading higher. re-entry, price respected the other block, swing high, retracement, another re-entry, and that was how price traded higher to a one standard deviation before actually doing the retracement on Friday. So on Thursday, higher prices. I was currently looking at Fridays to take out Thursday's high before this retracement, but price failed to run the high, just did a retracement to the daily fair value gap, which I didn't actually trade any intraday setup in this currency. No 5 minute trades throughout the week. The only trade that was fully aligned with the idea of price expanding higher, seeing that the dollar is ready to expand, was this trade, which was a 7 hour trade from this other block, swing low, stop at the swing low. The other re-entry, I didn't actually take those re-entries because taking this trade a week is a high probability setup, or you can say is enough for me to lock in the profit of catching a swing of around 7 hour. So you can see when you have that correlation and you have that bias and you have that confirmation on the specific currency you're trading, it's easy for you to take advantage of any currency. As long as you understand the currency that is correlated with that currency, understand the fundamentals around that currency, it's easy for you to take advantage of those trades. Now, I do take in consideration of the fundamental part of things before actually taking a trade or actually deciding on a bias on every week. I know I'm not explaining about the fundamental part in this live turbulent analysis, but I can tell you guys I do take consideration of those fundamentals before actually taking trades or deciding my bias for the week. Knowing that for you to take advantage of those fundamental to know what I look for before actually taking a trade is for you to go through the 2025 mentorship program. It was fully explained in that mentorship program. So it's completely free. It's on the YouTube channel. You just check the playlist and you'll find a 2025 mentorship program. Go through that mentorship program. It will teach you the basics of how I do trade. And once you understand the basics of how I do trade, you can easily align your trade idea with mine. So you can build up your own personal trading plan or my own trading plan, which is being given out to you guys every week, talking about my losing trade, my winning trades, and how I took advantage of the setup, what was my thought process throughout the week. So it's easy for you to understand how to trade going through my YouTube channel, going through every week series on those videos I'm posting. So make sure to like and subscribe and turn on the notification bell to be notified whenever I drop a new video because my videos will be in a series in which you can easily learn from it, which will be more on the 2026 mentorship program, which will be completely free on the YouTube channel. I'll talk about it later on in further videos. But for now, just understand that the 2026 mentorship program will be completely free and it's all be available in the YouTube channel. So that is it for this video. See you guys in the next video.